Welcome to AM Best Audio.
Amwins' latest State of the Market report offers a look at where insurance conditions are stabilizing, where pressure remains, and what lies ahead in 2026. To unpack the trends shaping pricing, capacity, and risk strategy, we're joined by Sam Bagg and Jeff McNatt, who are both co-presidents of the Amwins brokerage division. And Sam, we're going to start with you today. What are some of the highlights of the report?
Look, we publish a report periodically really to give a broad overview of what we're seeing in the marketplace across property, casualty, and professional lines business, as well as technology trends and just trends we're monitoring. So, the highlights of the report are that we do a high-level survey and comment on different trends in the business. And then when we get within each line of business, we go much deeper and provide more insight based on certain specialties.
Yeah, and I would only add to that we look into industry specialization. We touch on some reinsurance factors along as other economic factors driving the business.
And Jeff, how are rate movements and capacity trends evolving across key product lines?
Well, Sam and I, if we run the brokerage division, so we look at, from our perspective, we look at it kind of sort of three buckets. It's property, professional lines, and casualty. From our experience and what we've been dealing with and what we see in our numbers and results is that the property market had some serious rate headwinds for us. We were fortunate our brokers got out and hustled, and we actually grew slightly in property, and that's due to just an increase in amount of submissions and the stability of the wholesale marketplace in general. Casualty wise, that actually helped us a ton this year so we had got some there was a lot of rate in that space, not as much as 2024, but we got some rate lift in 2025. You start to see some pressures on rate in the casualty space because folks start to look at alternative vehicles, such as captives and various strategic type capacity. So, and then in the professional line space, we've had quite a bit of headwinds over the last 3 or 4 years, heavy rate reductions in almost all aspects. We track our business in about 36 different lines of professional lines. So, but most of them all had a lot of headwinds on rate reductions, and it seems to have sort of flattened out. And and our teams have done an outstanding job of getting out and calling on customers and seeing our retailers and providing solutions to insureds, and we had a pretty good year in professional lines as well.
Sam, the report highlights a mix of softening conditions in some sectors and persistent pressures in others. What are the most important signals brokers and carriers should watch to differentiate between temporary versus structural shifts?
Yeah, when I think about temporary or structural, I think about longevity. So, when submission flow increases dramatically in certain lines of business or certain sectors within a line of business, that tends to be more of a secular shift where there may be a void or disruption in the marketplace. But if that trend continues over the long haul, 12, 24, 36 months, I would consider that more secular in nature, where there's a consistent flow of business and submissions coming through for a longer period of time. And, where accounts renew, 2-3 years in a row, I consider that to be more secular than short term.
Yeah, I was just going to add on to that point, Joe. I think, look, as Sam mentioned, we're definitely seeing the wholesale spaces we have seen increased submissions across all lines of business. So I think that stands for some good things for the E&S side of the business, where submission flow is continuing to stay high. And I think that retailers and insureds are seeing the E&S marketplace as a solution, and that carriers are, a vast majority of carriers see the E&S marketplace as a place to lean in and allocate capacity and sort of create some clear swim lanes for items that are and coverages that are typically placed in the wholesale world. So, long term, we're still very optimistic of what the wholesale platform brings to the industry.
So, Jeff, with global capacity reportedly expanding and competitive behavior intensifying, how should retailers position their submissions and client strategies to secure the best terms?
Yeah, I think it sort of tethers back into my commentary on submission flow. I think that with so much capacity coming into the marketplace in the wholesale space, that insureds and retailers are definitely making sure they are shopping and covering the E&S marketplace as potential solutions for their customers, and some of them not even on more traditional business. There are still some very creative solutions in the E&S marketplace for those customers.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Jeff, we can't have one of these discussions without talking about artificial intelligence, and AI and data tools are increasingly referenced in the report. How is AI reshaping underwriting, claims handling, and market transparency?
Yeah, that's a great question. Look, I think long term there is the AI will certainly play a big role in it. I think today a lot of us there's a lot of dabbling going on, and we're using it for utilization of tools than we are of integrating it necessarily into our entire ecosystem. There's a few, startup wholesale operations that are really leaning hard on AI. I think our carriers are starting to use tools and submission scrubbing and those kind of things to allow them to get to submissions faster and see more submissions and have a little more accurate data and picture of the risks that they're taking on. So those things are certainly going to continue to evolve. I mean, we have leaned hard into some AI tools and looking at how we can continue to utilize those to enhance our team's capabilities to study their accounts, to broker their accounts. All of those things, I think will help us long term. But look at it in a couple buckets as you mentioned. We look at it as tools, how we are using it, and then how are the carriers using it, and how are they using it throughout their ecosystem of claims, et cetera. The interesting part for us, John, is what will AI do from a risk exposure to our customers? How insurable are those type of risk, and do those fall outside the scope of a normal casualty or property or professional lines policy, and are those risks that will be coming into the business, how are those looked at in traditional policy forms, and how are we going to evolve to make sure we're covering those risks for our insureds and taking care of our retail client base and being creative?
It's a $64,000 question, isn't it, Jeff?
Yeah, that's exactly right.
Sam, in casualty and liability segments where pricing is flattening, what underlying loss drivers such as social inflation, litigation funding, or severity trends are you most closely monitoring?
Yeah, look, I think, for the last 2 or 3 years, the buzzwords have been nuclear verdicts, that are a function of social inflation, and that's being driven by the funded litigation. I think what we're watching the most is, what the potential impact of tort reform is going to be. You now have states that are, reducing the standard of care, or reducing, strict liability laws, so that, if owners are doing certain things, they aren't as liable as they have been in the past. I also think certain states are making you disclose when a plaintiff has entered into a funded litigation agreement. I think that if that trend continues, it should help reduce the pressure on these verdicts and social inflation. I think if juries are aware that there's a third party funding litigation, that it will have the impact it's intended. And it varies by state, but Florida and Georgia have been really active in those areas, and you're starting to see it spread across the country. So I don't think you're going to get rid of angry juries, and the social aspects that exist today. But I think, if tort reform continues, it'll have a major impact on the casualty market that should play out in the next few years.
So, Sam, looking beyond 2026, what emerging coverage needs do you see gaining traction first, and how should brokers prepare now?
Well, Jeff touched on this. I think AI is going to create its own set of challenges, with technology-driven losses or systemic exposure that we don't even know exists today. I think the second thing you're seeing is that, the world is better connected. So you've got a lot of global issues where something happens on one side of the world that impacts the other side of the world. So I think as the world economies get more connected, we're going to have challenges, where carriers look at risk across a broader spectrum. And then third, I'd say the geopolitical environment really difficult right now. You've got the Middle East, you've got the Russia-Ukraine war, you've got the Venezuelan situation. So I think as politics come into play and you end up with, I would say, high tension zones, that's going to spill over into the insurance marketplace. And I think the way carriers and buyers look at those exposures is going to change.
Yeah, and that was a great 30,000 foot view there, Sam. And I think like if you look at the creative capacity that's coming into the market, John, I think that's one of those things where there's these indexes and these sidecars, and we're seeing some other capital come into the marketplace through ILS vehicles, and it's interesting dynamics to keep our eyes on to see how are these things going to perform over the long haul, and how do they respond when the industry suffers some huge catastrophic losses in property, or how do they respond in professional lines when there's some massive cyber event or those kind of things. So it'll be interesting to see how they all evolve. But the industry, I feel like at this point in time is really on the verge of some of the most creative products and capacity generation that we've almost ever seen.
Well, a really comprehensive report. Sam and Jeff, thank you so much for taking the time to speak with us today.
Appreciate your time.
Absolutely. Our pleasure.
That was Sam Bagg and Jeff McNatt, who are both co-presidents of the Amwins brokerage division. And I'm John Weber for AM Best Audio. Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.